Are you strapped for cash, or maybe you're sitting on some extra savings in retirement and you are looking for a way to make a little extra yield? You see an app called Lenme. It promises a beautiful, modern way to solve your financial problems. If you need a small, quick loan from $50 to $5,000, they say you can skip the big banks and borrow directly from regular people. And if you are an investor looking to make your money work for you, they promise you can act like the bank, fund these microloans, and pull in some juicy passive income. It sounds like a win-win, doesn't it? It sounds like exactly what you need when inflation is biting into your fixed income, or when an unexpected medical bill or car repair pops up out of nowhere. But your gut is talking to you. You're asking yourself the single most important question you can ask in this digital age: is Lenme legit, or is it a scam? I want you to take a deep breath, because today, we are going to look under the hood of this app together. We are going to address the truth, the hidden costs, and the real-world dangers facing your hard-earned money. Because at this stage in your life, you do not have the time or the money to make mistakes. You cannot afford to lose a single dollar to a bad gamble or a slick tech platform that promises the world and delivers a headache. Let's address the borrowers first. You are facing a tight month. Maybe you are waiting on your Social Security check, or your pension payment doesn't hit until next week, and you just need a few $100s to bridge the gap. You see Lenme and you think, thank goodness, I don't have to go to a dirty payday loan office or pay a massive overdraft fee to my bank. So, what is the problem? The problem is how this platform actually operates versus what they tell you in the flashy commercials. Technically speaking, Lenme is a registered peer-to-peer lending app. It is not an outright criminal scam in the sense that someone is going to steal your identity and disappear into the night the second you download it. It is a real app on the App Store and Google Play. But listen to me, just because something is legal does not mean it is safe, and it certainly does not mean it is good for your financial health. Here's the fear that so many users are experiencing right now. You sign up and you realize that to even use the marketplace to ask for a loan, you have to sign up for a subscription fee. It might look small, just a couple of dollars a month, or they might offer you a 3-day free trial. You think, fine, I'll pay it, get my loan, and move on. But then you post your loan request, and you wait. And you wait. Days go by, and absolutely nothing happens. No one funds you. Why? Because it is a peer-to-peer network. If individual investors don't want to take a risk on your profile, your request just sits there. But guess what doesn't sit there? The subscription charges. Hundreds of users have filed complaints stating that the app froze when they tried to cancel their trial, or that they were continuously charged a monthly fee even though they never received a single dollar in loans. You are paying money you do not have, just for the chance to borrow money. That is a broken system, and it exploits your financial vulnerability when you are already stressed. And it gets worse. If an investor actually does make you an offer, you aren't out of the woods. You have to pay an origination fee to the platform, and the interest rates are determined by the lenders. If your credit score isn't pristine, those interest rates can skyrocket. Before you know it, you are paying fees upon fees, and that cheap, easy loan ends up costing you a fortune. Plus, multiple users have reported that after signing up, their data was shared with third-party partners, resulting in their phones ringing off the hook with high-pressure calls from debt relief agencies and alternative lenders. You wanted a quick fix, and instead, you bought yourself a mountain of spam and unexpected monthly subscription charges. Now, let's turn the tables. What if you're on the other side? What if you are retired, you have a few $1,000s sitting in a low-interest checking account, and you are terrified that inflation is eating away your purchasing power? You see Lenme from the investor's perspective. They tell you, be the bank. Lend out $50 here, $100 there, and collect high interest rates. It's a perfect stream of passive income. Lenme tells you that they evaluate the borrowers and give them a risk rating based on their credit data. But at the end of the day, these are unsecured personal loans. If that borrower decides to stop paying, or if they fall further into financial ruin, do you know what happens to your money? It vanishes. There is no Federal Deposit Insurance Corporation backing these loans. The government is not coming to save your money. Lenme is not going to reimburse you out of their own pocket. If the borrower defaults, you lose your principal. Period. Think about the math here. If you lend out $1,000 across 10 different borrowers and 2 or 3 of them completely default and never pay you back, it wipes out all the interest you made from the other 7 borrowers. You aren't building passive income. You are gambling with your retirement nest egg. At this stage in your life, your number one financial goal must be the preservation of capital. You cannot afford to play casino games with your savings just to chase a few extra percentage points of yield. So, what is the actionable takeaway here? What is the final verdict on Lenme? Lenme is a legitimate technology platform with a severely flawed execution, poor customer service, glitchy subscription practices, and a high-risk ecosystem for both sides of the coin. If you are a borrower looking for short-term help, do not pay a subscription fee to an app that cannot guarantee you a loan. Instead, look into established cash advance tools that do not require credit checks, or better yet, speak with your local credit union, which often offers small-dollar, low-interest emergency loans to members without the hidden tech traps. Protect your peace, protect your pocketbook, and remember that if a financial opportunity sounds too good to be true, it almost always is. Stay safe, stay smart, and keep your money where it belongs, with you.